pay no taxes on your crypto gains. Wouldn't that be nice? There is a way to do it, and that's what I'm going to talk about. It's going to be fairly high level, but I'm going to walk you through how to do it and the steps. So I'm going to talk about the benefits of it, who can do it, and then also I'll show you inside of the account exactly how the interface works. Those three things, it'll be fairly quick to give you an overview. So as you can see here, I'm talking about iTrustCapital. And by using an IRA, a traditional or a Roth, you're able to avoid taxes. And that's exactly what we're going to talk about. Now, there's a link down below. Please use that link if you go over to iTrust and you consider using it. I've actually been using iTrust for over 3.5 years, and I still do. And it's the only one I use for my crypto holdings within IRAs. Because if you think about it, really, 3.5 years ago, there were no ETFs available. The only way that I was able to purchase crypto within an IRA account was to use them, and you get to purchase individual crypto. We'll talk all about that. But the only other way you can do it, even today, is to use a spot ETF, and this is June of 2025 when I'm making this recording. So currently, there's only Bitcoin spot ETFs and Ethereum spot ETFs. So you would have to buy them within your retirement accounts. You can get started with as little as $1,000. And you can fund it every year, or, and we'll talk about this as we go along, you can do a lump sum, you can do a movement from another IRA account, which is what I did to get a more substantial amount of money in there faster. And I'll talk about my strategy at the end. I always have to say my disclaimer, I'm Brian, I'm a big dumb animal, don't do what I do, informational purposes only. Like I said, I've been using this for 3.5 years. Now, you might be thinking, let's say you're in your 20s or your 30s, what's this old guy talking about? I don't want to think about retirement and I don't need this. Well, hold on. If you've ever used one of those calculators online, or you can probably find them online, where you put in a set amount of money. You say, I'm going to invest $1,000 into a bank account. And I think I'm going to get 5% a year, and I'll put in $50 a month, whatever it is. And then over time, you watch it grow. And eventually, it really starts to snowball. So the longer you're able to invest and compound that, the better. Now, some of those calculators, if you're going to do it, find the ones that allow you to also put in, well, I have to pay taxes on my gains. We're talking about a non-IRA account, just a regular account, checking, savings, one of your 401ks, whatever. And then you take out the taxes every year because you have to pay taxes on your gains. You will see that that curve of growth is greatly stunted because of those taxes. So being able to save in retirement accounts is substantial because you save on the taxes. You're not paying taxes on the gains. So take a look at this example here. If you were on the left-hand column here, it says exchange. On the right-hand column, it says Roth IRA. So it gives two examples of buying some Bitcoin of $10,000. So on this side, you're going to buy a Bitcoin for $10,000, not in an IRA. Over here, you're in an IRA and you're buying some Bitcoin for $10,000. Left-hand side, the value of your Bitcoin appreciates to $60,000. You sell your Bitcoin and you make what? You make a $50,000 gain. Same over here. It goes up to 60, you make a 50 gain. Why? Because it cost you 10, you sold it for 60. 10 is called your basis, it's what you paid. So 60 minus 10 is your 50. That's probably obvious. Left-hand side, with a capital gains rate of 15%, you would have to pay, because you pay capital gains tax in the US, $7,500, which is 15% of your $50,000 gain. So of your $50,000 gain, you would keep $42,250. Right-hand side, you sell your Bitcoin for gain of $50,000. Your capital gains are non-taxable, so you'd pay zero capital gains because it's in an IRA account. So you get to keep the whole $50,000. So on this side, you got to give them $7,500. Over here, you don't. Now, if you're doing this and trading crypto on a year-to-year basis over time, you can see where this can grow a lot if you're paying $7,500 a year in taxes versus nothing. But here's the real benefit. Think about this. In this column here under exchange, you're left with $42,500 because you paid taxes. On this side, you're left with $50,000. what does that really mean? Well, that's year one. So over here, you're going to invest and buy more crypto. Maybe some altcoins, maybe some stable coins, depending upon if we're a bull or bear market, maybe some more Bitcoin, whatever. But you're only going to be able to invest the 42,500, let's say plus your 10, 52,500. Over here, you got to keep the whole 50 plus 10, that's 60,000. So you're able to invest more. What happens the next year? I'm just going to do some quick math in my head. It might be wrong, but you'll get the idea. Over here, if you've got 52,500 left, you double that. So 2 years gains, you're able to invest 105,000 roughly. But over here, you're able to invest 120,000. Well, now that's a $15,000 difference. Do it again another year. So you can see that the benefits are compounded year after year after year. Again, see a financial advisor, but I'm telling you, if you're in your 20s or your 30s or even your 40s and you believe crypto is going to go up and you watch the markets, you watch shows like mine, and you try to buy and sell and make some decent gains, and even if you just held Bitcoin, I mean, there are those that are saying, hey, Bitcoin's going to 150, 200, 250, a million, whatever it may be. You're not going to pay gains. Well, you never pay gains, capital gains, until you sell something and you have a profit. But once you do, you would have to pay taxes. So if you're buying and selling year over year and you're avoiding those taxes, you're greatly increasing what you're able to invest. So I want to show you this practical example just to give you an idea of how powerful it can be. Real quick, here's a great way to summarize what they do. It says they provide 24/7 access to digital assets, cryptocurrencies, and also precious metals through self-directed, tax-advantaged IRA, and they also have now non-IRA accounts. We're just going to be talking about their IRA accounts. So obviously 24/7, you can get in here anytime, just like any other crypto exchange. They have cryptocurrencies, of course. That's what we're talking about. They do have precious metals at the moment, gold and silver, and we'll see if they have any others. But you might be thinking, well, why do they do that? Well, because gold and silver are commodities. And for most of us who are buying crypto, we're really trying to avoid inflation. It's an inflation hedge, particularly Bitcoin. Meaning we don't want to hold dollars because dollars go down in value due to inflation constantly. Over the last, 100 years, the dollar's lost like 99% of its value. But if you had held things like gold or silver, I'm talking about from a long time ago, you'd have way more money. So it's just other options. Now, I've used in the past other companies to buy physical gold and silver on my behalf. I sold most of those. If I do it again in an IRA, I'm going to do it through iTrustCapital. Okay, so that's the basics of it. Now, you get there's two different types of IRA accounts. And this has nothing to do with iTrustCapital. This is just IRAs in general. They have what's called a Roth and a crypto traditional IRA, or a traditional IRA. And you really, if you've got an accountant or someone, you should talk to someone so you set up things properly from your end for your retirement. But essentially this, when comparing a crypto Roth to a traditional, the primary difference is in their tax treatment. Listen to this. Contributions to a traditional IRA are often tax deductible in the year they are made. So if you make $100,000 during the year and you're going to be taxed on it, when they say tax deductible, let's say that you're able to put in $6,000 and deduct it. So your gross income would be $100, but your adjusted gross income, what you're taxed on, would be $100 minus the $6 that you put in. So you wouldn't be taxed on that $6. And you would be taxed on 100 minus 6, which is 94,000, your adjusted gross income. Now that's substantial because let's just say that you were paying, I don't know. It depends on your tax rate and everything. But if you're paying 20%, so that's $6,000, it's like you're getting a free 20%. If you had been taxed on the $6,000 and you had to pay 20%, well, 20% of $6,000 is $1,200. It would be $4,800 is what you'd be left with. But by putting it into an IRA, you actually don't pay taxes on that, just going right in. Then, if you buy and sell and make profit in the account, you don't pay taxes. It's deferred. So that's what they call the immediate tax relief. Now, withdrawals in retirement are taxed as ordinary income. So let's say that you put money into this account. We're talking about a traditional. Every year you put in however much you're able to put in, or up to that amount. And then it grows and you buy and sell. If you're following the traditional cycles, if you will. We're buying Bitcoin hopefully low, selling it hopefully high, rolling it into altcoins, hoping they go up quite a bit more, and then rolling back to Bitcoin, and just kind of using this structure that seems to be working at the moment. We'll see how it plays out over time. But the idea being, when you're making those profits, you're not getting taxed on them. So it's growing even more. When you retire and you start taking money out, you're taxed as that money's coming out. The general idea is that when you're in your prime earning years, you're putting money in. When you retire, if you don't have a job, then you're no longer going to have that income. So your tax bracket will probably drop. So maybe you're not in the 30% tax anymore, you're in the 10 or 15, and you're taking out a little bit from here. You're getting taxed on what you're taking out as ordinary income. Okay. The other one is called a Roth. Now, traditional IRAs are the oldest type, and then they came up with what they called the Roth. Now, that's called after-tax dollars. So in other words, in that example I gave, that $6,000 you could put in and you weren't taxed on it. Well, in this case, you would be taxed. So you're taxed on your $100,000, then you take whatever, $6,000 or $4,800, and you put it in here. But that means that your withdrawals are in a tax-free environment. So when you're older and you're withdrawing the money, you're not getting taxed. Do speak to a professional, financial individual, if you're young, as early as possible, so you understand the differences and the tax implications. So for some people, they might say, if you're really young, you might want to do a Roth. If you're really old, you might want to do a traditional. There's reasons to do that. But anyway, there's only two types of IRAs, the Roth and the traditional, and they have both. Next, pricing. Now, this is very important actually, because like I said, we're saving money by not being taxed. However, what if there are a bunch of fees? You always talk about mutual funds or ETFs and which ones have the highest fees. This is important. Like I said, I use another company that I no longer use for gold and silver. And I got frustrated because I had a fee constantly, like maybe every month and then every year, different types of fees because they're holding it on my behalf. I had an account fee. It was just nickel and diming me. I wasn't happy with that. Here you go. Startup fees. In other words, you sign up, you have to start with $1,000. You put it into a traditional or an IRA or a Roth, or maybe you move money over, 0 startup fees. You can just put that in. If you put in $1,000 goes into your account. Crypto transaction fees, buy and sell, is 1%. Now you might think, well, no one else charges fees. They do. If you look at Coinbase, even the Coinbase Advanced, there are fees involved. Any exchange, there's going to be fees. That's how they make their money. Gold transaction fee and silver transaction fee. The gold one is $75 over spot. The silver is over spot. So if you had physical gold or silver and you took it to a dealer and you tried to sell it, this is how the dealers make their money. They say, oh, well, the current price of gold is $2,000. So we'll give you $2,000 minus 75 because 75 is our fee. That's not bad. Gold is anywhere from 1 to 5%. Usually 1 to 2 would be great. Silver is typically like 5 to 15%. So this is in the realm of what most of them charge. But here you just do it online. You don't have to go somewhere and take your gold and silver. Anyway, we're talking about crypto, but to me, this is a great model because there are no monthly fees. There are no annual fees. There's no startup fees. You're just paying transaction fees when you buy or sell. All right. Here's the other thing that I want you to know, which you may be thinking, you may not. In the past, there were some crypto companies that went bankrupt and exchanges, and they were holding people's crypto. I know because 2 of them that went under, BlockFi and Celsius, I had them holding some of my crypto, and I had to wait for this 3 or 4 year bankruptcy procedure. It was a pain. So 2 things to know here. It says assets are held off balance sheet. Your assets, not ours. Very important. It means that they're not, if you have $100,000, because you in Bitcoin, let's say, it's not sitting on their balance sheet. So if they were to go bankrupt, the creditors can't go after it. 1. 2, banks will leverage the deposits and that sort of thing. That's why some banks have problems and go under. They don't. They don't loan against the assets. They don't leverage them in any way because it's not on their balance sheet. That's very important. So if there was some sort of a bankruptcy, the way it should work is you're able to move your assets right out somewhere else, or they would help you move them because it's not going to be part of that. The other thing is, you might be thinking, okay, well, where are these things held? 3 places. They use Coinbase custody accounts. They use Fidelity Digital Assets and one called Fireblocks. That makes me feel good because I know where they're being held and I know that they're not going to get stuck in some sort of a bankruptcy if that were to happen. All right, so now we went through the basics of the fees that they charge, what type of accounts you can have, the fact that no matter what age you are, this can be very beneficial, and you're not going to be taxed when you're buying and selling things within these accounts. I believe that in and of itself is huge. And let me tell you real quick, before I show you the interface. I'm 53. I know, I look way older than that. My brother's actually 10 years older than me, has a full head of beautiful hair, and people think he's younger than me. Isn't that great? I just got really lucky. So my theory is that I've got a chunk of money in standard retirement accounts. And then, or in retirement accounts, but let's say standard ETFs and stocks and that sort of thing, and treasuries, whatnot, fairly conservative. Then I took a portion and I put it here. My theory and my belief is that crypto is going to outperform, meaning make me much better percentage gains and grow faster than my other. So, why would I do this at 53 if I wanted to retire really soon, for example? I may never retire. Most people don't, just because it's fun to do stuff. But my theory is, okay, I will probably start taking money out if I don't have an income and I need it from my basic retirement funds. Because what I have in crypto, I think is going to grow much faster. So even though I'm 53, some people, I think you can start taking out at 57 or 62 or 63. There's different ages you can start taking out. It also affects how much you can take out. All these different rules. Don't worry about that. The point is, I'm not going to be taking my crypto out probably in the next 5 years or 10 years, or maybe even 15 or 20 years. It's going to be the last thing I touch because I believe it's going to go up substantially more. All right, let's get into the account itself. Now, I'm going to blur out some of my dollar amounts and whatnot, but it's very easy to use. And I'll tell you, like I said, I've been using this for 3.5 years. When I first started using it, I picked it over others for multiple reasons, one of which was this very easy to use interface. You can see here, open IRA account. Now, I'm not going to go into all of the details on exactly how to open one or move one. It's not complicated. It just takes some time. You'll see at the end of this video, I have a school community, a crypto school, where I teach all sorts of things and I go into more detail. But you can have multiple accounts here. Very easy to fund it. They have their support. But basically, this is all you need to know. You're going to click into, in this case, this is a traditional IRA that I have. That's where I move money over. They have a nice summary here, but I've blurred it out. But it just shows you your profit, your gains. Now, when you scroll down, it shows you all of the assets that you have. It's going to show you the allocation. I've blurred everything out, but it's going to show you what percentage of these do you own, what's the market price currently, what are today's gains, and they show you your balance. You can click into one of them and learn what your average price was and all that sort of information. But here's how easy it is to use. Here are all the assets and cryptocurrencies, and then they have here physical gold and silver. So you can just click and you can buy gold and silver. Cryptocurrencies, here are all of them. I'm going to slowly scroll down and then I'll show you how to buy one. It is unbelievable because when they first started, I want to say there was only 5 or 10. And I always log in and check because I wanted to make sure they were adding things that I really wanted. So here they all are. It's an incredible list. Of course, you've got Bitcoin, Ethereum. These are the top 10. XRP, Solana by market cap. Not saying they're the best cryptos by market cap. You're probably very familiar with the top ones because you've got even meme coins like Doge, Cardano, Sui, Chainlink, Stellar, Hedera, Litecoin, Polkadot, Uniswap, Aave, BitTensor, Aptos, Near Protocol, ICP, Ondo, Polygon. You've got some, like I said, Bonk, VeChain, Arbitrum, Render, Fetch, Filecoin. I'm mentioning a bunch of the ones that I really like. You've got Flare, Celestia, Injective, Optimism, Sonic, IP Stories in here. You've got some more meme coins, and they just go on and on. So, like I said, the only other way to purchase crypto in a retirement account is through a spot ETF. Bitcoin one at the moment or Ethereum, and that's it. Just these two. You want to own anything else? You want to buy it? You want to sell it? You want to hold it? Here they are. There's no other way to do it in a retirement account. This is brilliant. Okay, real quick. And what's also interesting, they have schedule recurring buy, so you can do things, dollar cost average and whatnot. But we'll click into one. They always show you the same thing. This is Bitcoin, and they give you the basic information. I don't hold any Bitcoin at the moment. That's why you're not seeing my gains, my realized gains. It would show you my average cost, the portfolio percentage. Over here, it's blurred, but I did own some in the past. I don't have any money available because I have it all invested. But if I did, you would just click here, buy Bitcoin. It tells you the price. You can say market order, conditional, recurring buy. My balance is 1 cent because I've put it all into crypto. You would just say how much in USD you want to purchase. You would click submit market order. When I do market orders, they are instantaneous. It happens in 2 seconds and it shows up on my account. So if you want to learn more about exactly how to use these, it goes into much more detail. I have courses in my crypto school. Here's a little brief background about my crypto school. It's got 2 main sections. First, we've got discussions about all sorts of crypto and people talking in there on a daily basis. But the reason I created it and what makes it so unique compared to all the other communities out there is that it has courses. And the courses are to teach you just like I've done here. They go into way more detail, whether it be getting crypto into an IRA account, learning how to set up wallets, learning how to move crypto, learning how to put crypto out onto an exchange, learning how to put crypto out and earn a yield or obtain a loan, whatever it may be. I've got topics and I'm creating new courses all the time. Take a look, it's down below. So thank you for watching. I hope this was helpful. As I always say, I hope we can make generational wealth together in crypto. Please do like, it would greatly help out the channel if you like the video. Please subscribe if you haven't. I focus on individual cryptos. Sometimes I compare cryptos, and I have some how-to videos as well on my channel. Have a great day.